Do stop losses actually work? My results may surprise you. Let's dive in and do some backtesting. So before we start, this is not investment advice, so do your own research, etc, etc. And particularly for this video, I am not talking about day trading here, I am talking about swing trading of daily and weekly charts on a much longer time scale, and this is not trading on margin either. So for this experiment, I'm using my custom built Backtester. It's built in C# and uses a SQL Server database. So I've downloaded stock data from a number of sources and I have over 900 quality stocks and ETFs in the database. The US stocks are mostly S&P 500 constituents. UK stocks is a mixture of the FTSE 100 and 250, so they're large cap and mid cap mostly. And ETFs, I cover most major themes. There are 205 ETFs. I do have some data from the early 1970s and even earlier than that, but most of the stock data is from 2000 onwards. So what is the backtesting process? It starts with 20 tranches of cash, or 10 for ETFs, then splits them as the portfolio grows. So we start with $10,000 and go from there. So the bot buys and sells according to the strategy. It has no forward knowledge. It only accesses past data or the current price data. So the stocks particularly will have a large element of survivorship bias. I'll make another video about that. So just to be clear, it doesn't include dividend data, so we're not looking at total return. And the bot buys at the midpoint price of the daily candles open and close. So, for example, on this day here, it would buy here. On this day here, it would buy here. I've done this because this is realistically a price we would be able to buy at in real life. It does also exclude taxes or dealing charges. So let's get going and do the first backtest. So we'll test on some ETFs. And there's 205 listed ETFs. The full list of them is on my website, etfsectordata.com, if you're interested. And let's backtest from 2010 to early 2025. So for this test, the bot will buy specific randomly generated buy points. I have generated them so that I can reproduce the results and run it multiple times. So the bot will buy the stock, and then it will sell if the holding achieves a 10% profit. So if there's no profit, the bot will hodl for 12 months, then attempt to sell at a break-even price after that. So if there's no profit in a year, it will try to break even. And it will hodl for another 12 months while it's trying to break even, and then it will sell for whatever price. So on the second anniversary of when we bought the stock, it will just sell for whatever price we can get. So let's check the results. So here's the equity curve, and the red line is when we don't use a stop loss, and the green line below is when we do use a stop loss. So as you can see, the stop loss really has hurt our returns, and we would have made more money theoretically if we hadn't used a stop loss. So just started with a 10% stop loss, but what is the optimum stop loss, if indeed a stop loss even works? So you might want to press pause on your player here because it's a bit of a mishmash here, lots of charts. So no stop loss is the red line. So looking at this chart, it's clear that stop losses do work and boost returns sometimes. So the best stop loss seems to be either 30% here or 20% is the dark purple here. So as you can see, the 10% stop loss didn't work very well at all. That's the lagging one here. So what is the conclusion so far? So stop losses might not always lead to higher returns. Sometimes they do, sometimes they don't. And the optimal stop loss seems to be 20 to 30%. I should mention that it's just for this strategy. It might be different for whatever strategy you're using. And I've actually found this on doing a lot of other testing, for example, when I was building the stop loss strategy into this system. So for further tests, I will use a stop loss of 25%. Let's do another back test here. This time we'll use UK stocks. So there's about 200 of them, and this time we'll back test from 2018 to 2025. So that includes the Christmas 2018 bear market. That was a brutal year. Santa Rally didn't show up that one. I think the S&P lost 20%, so it was officially a small bear market. Of course, it also includes the March 2020 panic, and it also includes the 2022 bear market. And the UK was hit quite hard by that. This time we'll use a different strategy, and the bot will buy stocks at their 50-day lows. This is quite a good strategy I found, so let's see what happens here. So again, we'll sell if we achieve a 10% profit. If no profit, we'll hold it for 12 months to try and break even, and then after another 12 months, we'll sell. So what are the results from this one? So again, not using a stop loss does seem to have boosted returns. And I'm very disappointed. This is the COVID crash, of course, in early 2020. And the stop loss did not help us here. In fact, with hindsight, the best thing to do here was just to hold stocks and just not look at your trading account during this catastrophe. So I don't think that the chart is much different. The main problem is that the stop losses really didn't help in March 2020. And this equity curve didn't really recover from this exceptional event. So what did we learn from that? So the stop loss did not help during the March 2020 panic. They were a waste of time for that. And it didn't seem to help during 2022's bear market either. So let's do another test. This time we'll use US stocks and we'll use the time period which includes the great financial crash of 2008. So have about 400 US listed stocks. They're not necessarily all in the database at that time period though. And we'll backtest from 2005 to 2010. So there will be significant survivorship bias in the database. So my database just contains stocks that were listed in mid-2024. So they would have had to have survived. It also excludes a lot of stocks that were listed in around that time that subsequently delisted. And delistings, there's a lot of different reasons. They might have gone out of business or been acquired or merged or demerged or just moved their listings to another country or exchange. I've done a bit of research of survivorship bias of UK stocks, and the most common reason for delisting is that the company is acquired by another company. I can think of Kraft Heinz as one. I'm not sure when it happened, but that's one example. So this time the stock will buy stocks at their 50-day lows, and the rest of the strategy is as before. So again, the stop loss didn't really work. It was better to use no stop loss. And again, in 2008, the stop loss really didn't help in saving us. It looks like it also hindered the recovery from 2009 onwards. So from here, really, the best strategy was just to buy all of things, not use stop losses, throw caution to the wind, and just buy everything. Final backtest, we'll do a much longer term test, and this time we'll use UK and US stocks, so whatever's in the database. So although there are about 650 stocks, I won't have the data for them going back this long, so there won't be quite as many stocks to choose from. And we'll backtest from 1999 to 2025, and this time we'll buy stocks at their 52-week lows. This is a good timeless strategy that has worked for the duration of this test. Incidentally, there won't be any trading in 1999 because we need a whole year of data before we can actually trade. So we need to check if there's a 52-week low and then start buying them. And the rest of the strategies before will look for a 10% profit, then sell and buy something else. So here are the results. So no stop loss is at the top in blue. And using a stop loss, 25% is in red, and that's been low. So as you can see, really, there have been different periods when things have worked better and not so well. But overall, we've ended up with not that much difference, really. So 2001 to 2003 was quite a long, vicious bear market, and they were fairly equal then, pretty much identical. But then as the market recovered, the no stop loss strategy was the clear winner. It did tumble a bit during the smaller bear market of 2015, but then again it did have a pretty decent recovery. So to summarize, don't automatically assume a stop loss will increase the strategy's overall profitability. And don't believe anything without testing it yourself. And if you watch the entire video, then you'll notice that I did test over different time periods. So this is really important if you're testing a strategy. Don't just test it over the last year or last 3 or 5 years. Test it for as many different time periods, and also change the start and end times. So I hope you found this video useful. Thanks for watching.